Welcome back. This is a Business AM. Well, today we discuss financial education for everyone, but with a key focus on understanding and investing in our Treasury bills and bonds. And to help us through this, we're joined by Robert Ochieng, the CEO, Abujani Investment. Robert, how are you doing, sir?
I'm fine. Thank you very much, Elijah, for having me.
Happy to have you around as well. Robert, before we go into understanding Treasury bills and bonds and how they work, can you take us through what Abujani Investment does?
Thank you very much, Elijah. So Abujani Investment, what we do is that we help. So basically, at the end of the day, people need to grow their investments, set up some funds for their emergencies, retirement. So that's where we come in with financial education. Then we walk the journey with them, we show them the investment options that are available. Then they look at how these investments fit into their personal finance situation. Because different people have got different risk tolerance, investment time horizon, and what they want to do. Like the personal goals, they are very personal. So someone has to have a meeting with themselves, then decide what they want to invest. But the key thing is the knowledge. So we usually have three pillars. First is the mindset, which you need to set and decide what you want to do with your money. Then after you've had the right mindset, you need to have the right skill set, which is basically the financial markets and what is out there, so that you can know that if someone brings you a certain investment, it is likely to be a scam. And if you want to invest for the long term, this is the investment that you need to do. And if you borrow a loan, you need to pay in time. That's the skill set. Then finally, the tool set. These are the tools that aid you to invest, like the CDS accounts, if you want to invest in Treasury bills and bonds, a budgeting template, an accountability partner. So believe that with those three items, one is likely to be successful with their personal finance.
Pretty much. All right, now let's settle into the conversation today. And Robert, I just wanted to start from a very basic level this morning, because whatever we're doing here today, again, is pretty much that financial education for any other person who wants to get into this area. Let me first ask you from a very broad perspective. How stable is the financial market in Kenya in terms of returns? Is it one of those go-to places for investments?
Yes, I can say we are very stable, because we've learned quite a lot of lessons as a country, and even the financial services sector industry. There's a lot of stability in the insurance sector, in the banking sector, and the central bank and other players, they've been putting a lot of requirements in the capital adequacy ratios. So most banks are well capitalized, and that's the reason why we are seeing some of them holding back on their dividends, just to ensure that we can live past tomorrow. You know, we can give you everything as investors, but then we won't survive. So to survive, we ensure that banks are well capitalized. And there's been also a lot of consolidation in the financial sector. We saw that Britam acquired Real Insurance sometimes back, and we've seen also that NCBA is a merge actually between NIC and the former CBA. So when they merge, they become stronger. They become a force. And also KCB acquired National Bank of Kenya. And you can see with that stability, now they're able to do more, lend more. And as a big organization, they have a bigger vision, and they're looking at surviving past 100 years, which KCB and ABSA have done here in Kenya. So I think there's a lot of stability. Also in terms of investments like the government securities, the rates have been slightly stable. And we're actually seeing a lot of foreigners coming in. I've seen people from Morocco, Uganda. You won't find these rates anywhere in Africa. So I can say it's the go-to place for most investors, not just in Kenya, but people are looking at markets such as ours, like Africa.
Pretty much. All right. Let's therefore understand what the difference is, again, Robert, from what a treasury bill is and what a bond is, therefore, and start chatting on exactly how one can start to also invest in the two.
Yeah, so basically for treasury bills and bonds, they're both called government securities. So they are used to support the government's budget. So once the government does its annual budget, and if in case it has a deficit, then it will need to borrow from domestic customers and also foreign investors. So for domestic debt is where now the treasury bills and bonds come. And the main difference between treasury bills and bonds is basically treasury bills, the maturity is within 1 year. Then for treasury bonds, they mature between 1 to 30 years. So that is the key difference is just based on duration. Now, from an investment point of view, of course, you know that if someone is taking your money for the short term, that is in treasury bills, the rates would be slightly lower versus when you are lending them for the long term. So if you lend to the government in 1 year, that is a treasury bills, and it can be 91 day, which is roughly 3 months, then 182 day treasury bill, and the longest one takes 1 year, which is 364 day bill. So they are issued on a weekly basis. So this information is available in the dailies and also on the CBK website. So Central Bank of Kenya website is a very good place to visit for any Kenyan, because there's a lot of information just about the general economy, the banking sector, and how to invest in treasury bills and bonds. And also the auctions when they issue on a weekly basis, that information is available there. Now for treasury bonds, the information is shared on a monthly basis. So you'll find the available bonds there, and you'll be guided on the rates that are available. So for some, the rate for bidding is already available, so you don't need to put the rate. But for some, then now you have to bid. So if I were to look at treasury bills, I would say that they're usually for short-term investments. So they have individuals, if you have some cash that you don't need in the short term, and you want it to earn you some interest. So when you look at 364-day treasury bills, the returns currently stand at 9.2, which is actually above the inflation rate. So the inflation rate, was the one that was last shared with us, it stood at 6.8%. So if you are getting returns of 9.2, you are beating the inflation rate, which is very important. If you can't beat the inflation rate, then you're actually losing money by saving. So it means that if the inflation rate for the whole year is 6.8,
yes.
and you just
Robert, I'm sorry to cut you short. You're mentioning something very interesting there, that, well, if you can't beat the inflation rate into your savings or investments, then you're losing money. Can you explain that? Is that the threshold that you should look at before you get into any investment?
Yes, sure. So that's part of the skill set. So the inflation rate, it is a silent enemy that you won't know.
Yes.
You'll only know it a few years from now if you find that you can't afford those things that you're able to afford before. And I usually use a very practical example. So in the year 2004, a loaf of bread was going at 20 Kenya shillings. Now 17 years down the line, it is going at 50 Kenya shillings. So if you had 20 Kenya shillings and put it under a mattress, it means that you will not be able to afford a loaf of bread now. But if you had invested it with an investment at just 9%, it would be over 70 Kenya shillings. So it actually means that you could even afford 1.5 loaf of bread. So it means that you sustain your purchasing power. So it is very silent, but in a basic language, it simply means that if the inflation rate is 6.8% this year, and you had 100,000 at the beginning of the year, at the end of the year, you would have lost that 6,800. You won't know it, but the prices of goods and services would be going up slightly on an annual basis.
Yes.
So it's very, very important that you beat the inflation rate in all your investments. So that should be the bare minimum in terms of benchmark.
Pretty much. All right, Robert, but this is a question. I'm going to ask you this direct question. I know there's somebody who's listening to you right now and say, well, it seems very promising for me, therefore. Can I start investing in T-bills today? And I'm talking about the platform or the avenues that enable me to invest. Must I talk to you first? How do I start investing today? Let's address it on a very basic level.
Yeah, so thank you for that. So we talked about the toolset pillar. So
yes.
Toolset pillar is actually knowing the platforms or tools that are going to aid you to invest. So for treasury bills and bonds, you need to open an account with Central Bank of Kenya. It is called a CDS account. So CDS account for trading treasury bills and bonds. you'll have to open it through the Central Bank of Kenya. So you can go through their various offices. We have the headquarters here in Nairobi. Then we have other units in Kisumu, Mombasa, Meru, Nyeri, as well as Kisii, which they recently opened a currency center there. So, and even Nakuru as well. So you can visit the nearest CBK outlet and you'll get the forms, then you apply for the CDS account. Once it has been activated, it will be communicated to you through the email. Then when they issue now treasury bills and bonds, you can then bid and you become an investor. So with the treasury bills, you'll get your returns. If it is 3 months, you'll get it after 3 months. If it is 6 months, you'll get it after 6 months. If it is 1 year, you'll get it after 1 year.
Yes.
But for bonds, the payments are twice a year, so they are semi-annual. So you'll be getting your returns every 6 months, just the interest alone. Then you'll get the last interest and the principal at the end of the tenure of the bond, which can be 5 years, 10 years, 15 years. So you have to sit down and look at your investment time horizon as an investor. But the starting point is the account, the CBK.
The account itself, yes.
Account.
You're raising a very, it looks basic from where you and I stated this morning, but you're saying, well, that you have to bid. Can you explain that process to anybody who's listening to you? Because that's another technical term when it comes to investing in those T-bills.
Yeah. So basically for treasury bills, the rates are very stable. And I would say that for those who are starting out, you'll just say you are going by the market rate.
Yes.
So it's always safe for someone who is starting out, just write there the market rate. So in the bid forms, you'll be guided, and you can talk to CBK, you can give them a call, and you can also talk to, if you are going through an investment bank, you talk to them, you'll be guided. But if you put the market rate, I think that's the best option for people who are just starting out, because it means that whatever rate will be market determined based on the bids, that's the rate that you'll get. And usually it is quite an attractive rate. Like you talked about the just ended auction for 364-day bill starting at 9.2%, which is a very good rate. Yes. So just put the market determined rate for you at the beginning as a beginner.
Pretty much. All right. So let's talk about exactly what I need to know as well in terms of skill set. So should I know exactly how these are performing before I really get into investing in? Because the data that we have this morning would actually show us exactly how they performed all the way up to March 21st as well. That's the latest data that we have. So is it important for me to know exactly which is performing? And how do I sort of know what sort of performance that they're going to draw before I go into that?
Yeah, so usually we say that personal finance is like a silent life partner.
Yes.
So you have to treat your investments that way. Yeah. So you can't just wake up today and invest. So you have to have as much information as possible, and then you review to see if it is something that makes sense. Because sometimes you can do the mistake of investing first, then doing research later. Then you realize that whatever you're investing in really doesn't make sense for you. So it's very important. The information is available on CBK website. You'll see like the most recent auctions, and you can go back in time in history and see the trends in terms of returns. Also, the Nairobi Securities Exchange, they share what is known as a yield curve for the investments in government securities. So you can have an idea of the trends, like the current rate, which can now be like a safety net from a mindset point of view, whereby you're comfortable with the returns. So it's very, very important to look at the CBK website, get as much information as possible. Then you also need to know how they work, which is basically you are lending to the government, and from a history point of view, our government has never defaulted. So that is also something that can give you some level of comfort. Then if you look at the other alternative bonds, like corporate bonds, we have situations whereby the institutions that offered them, they defaulted. So you can see that one, the risks are very high.
Yes.
If you look at it from that point of view. So it means that there's more safety in the government offering. So with this information now as an investor, as you look at it, then at the end of it, you have to write down, and you know the reason why you're investing. You're investing because treasury bills and bonds, the rates are considered like risk-free because of the predictability in terms of the returns. and the safety from a historical point of view. So for any investment, we talk about history. We don't know what will happen tomorrow, but we're just saying that as of now, we consider them risk-free, and therefore investors who don't want to look at a lot of risk, but they still want to be able to invest and get some returns.
So this is the next question, just before we continue with this conversation, Robert. Somebody is asking, I have 20,000 bob. Can I begin from there in terms of investing in these T-bills, or there's a threshold that I must have for me to call it a proper investment?
Yeah, so usually for treasury bills and bonds, we are looking at 100,000 for treasury bills. Then you can invest in multiples of 50,000. So that is very key to know. Then if you are looking at the treasury bonds, there's a time the government usually offers what is known as a makiba.
Yes.
So you don't have any, but the last one, the returns were paid by September of 2020. So I believe that there are plans to issue another one, but the definite date has not been shared. So with that, with the makiba, you can actually bid with just 3,000 Kenya shillings. So that's also something that you should always be looking at. So it's an opportunity for most retail investors who can afford the minimum amount for treasury bills and bonds in the ordinary market.
Pretty much. We're still on skill set. Robert, I'm going to ask you direct questions that I'm just getting right now. Somebody's asking, well, people take loans to buy land, and then after that, the resale value jumps up. And then after that, you get that your return on that investment has either doubled or tripled over time. Somebody's asking here, could you advise me to go for a bank loan right now, invest in long-term government bonds and wait for that return, or that would be a wrong investment strategy?
Thank you very much. That's a very great question, because most of the times people ask us, should I take a loan to invest in the stock market or treasury bills and bonds? So most people say that I think the golden rule is never borrow to invest in the stock market or treasury bills and bonds. And it is very simple. When we are talking about the skill set, it is about numbers, right?
Yes.
So the government, treasury bills and bonds, treasury bills, the highest rates are at 9.2%, right? Then the bank lending rate is at 13%. So you can see the math is against you. So the wind or the wave is against you, because you are taking 13% and you are getting 9.2%. So you are just donating. So that kind of philanthropy, we can do it elsewhere, but not with the investment. Clearly, you can see, because you're actually losing money there. But with bonds,
yes,
the returns are at 13%, and the government is lending at 13%, so is borrowing at 13%, and the banks are borrowing at 13%. So it is a zero-sum game. So borrowing to invest in treasury bills and bonds, the math doesn't add up, because you need a margin to make a profit.
Pretty much. So it's gotta be a long-term. So Robert, I gotta ask you this question as well, because I'm also now getting a bit excited on exactly then when somebody says that, well, you see, for T-bills, you would actually need 100,000 and invest in couples of 50-50. How would you advise somebody to sort of save towards getting into T-bills investment?
Yes, so that is basically the mindset part now, because you say that to save 50,000 or 100,000 can be a challenge, but just saving 5,000 Kenya shillings in a month can be possible for most people.
Yes.
So that's how we look at it. It is the habit that creates the capital to invest. So if you save 5,000 this month, at the end of 12 months, you'll have 60,000. Then within 18 months, you'll have over, actually within 18 months, if you look at 18, you'll have 90,000. So you are very close. Then in the 20th month, you'll have 100,000. So that's what people should be looking at. You should not look at what you can't do now, but should look at what you can do in future, because investing is about the future. It's because we believe that the future is going to be bright, and we need money to cater for our emergencies, our personal goals, that car that you want to buy, that house that you want to build, the children that you want to take to school. That is the reason we're investing. And retirement, of course. So you have what is known as human capital. Now you have a lot of energy you can work. There's a time that human capital will be very low, and you need a friend known as financial capital to take care of you in those older years.
Yes.
So because of that, we invest and save for the future. So I would say that we should not look at what we can do now, but we can look at what we can do tomorrow with time. So we save consistently, invest, then once you raise the capital, then you can now invest in the various investment options within the various time horizons that are available that fit into your personal situation as an investor.
So somebody is listening to you this morning as we clear this conversation, Robert, and is wondering, wow, that's very good bits of information. I'm actually interested myself as well. So if I walk into Abujani Investments today and say, well, I want to take through the three skill sets, the mindset, the skill set, and the tool sets, how long is it going to take me to go through that, Robert?
Just 3 weeks, just 3 weeks. We believe that most people, we have entrepreneurs, we have professionals, they are very busy people, so we don't take a lot of their time.
Yes.
We just take 3 weeks, and it is taught in a very, very basic language, in a layperson's language, because personally my background was actually in IT. Then I went to learn finance, so I'm able to talk in an outsider's language to help people to understand these things in a layperson's language, and usually emphasize on action. So our teachings is driven towards action so that you can start investing as soon as possible. So within 3 weeks, you'll have gone through budgeting, you'd have looked at what the stock market is, what treasury bills and bonds are, circles, a lot of questions are coming in that space, and you also have money market. So at the end of it all, you'll have the skill set and the tool set that you need. So
Yes.
it will just remain with the mindset now that you decide, I'm going to set this part of my income aside to save or invest for the future. So within 3 weeks, you'll be ready to go. And the rates that you offer, like the amount of money that you pay us for this course is very affordable. So only 3,000 Kenya shillings. Because we are looking at our country, you know where we are, we're a cargo economy. So we are going to flow with the way our economy is to create value for you.
Pretty much. Quite an interesting offer. I mean, we're talking about investments and the various areas in which you can invest. This morning, we have been speaking to Robert Ochieng, CEO, Abujani Investment, and he's saying, well, there are a lot of investment avenues within the economy. It's only up to you to understand exactly what you need. And he's talking about three areas that you really need to understand: the mindset, the skill set, and the tool set to actually get into the financial markets investments in the country. Now you do know, but you want to know a lot, just 3,000 shillings and get that lesson for just 3 weeks at Abujani Investments. Robert, thank you very much for joining us this morning, sir. You've been quite invaluable.
You're welcome, and thank you for having me.
Anytime. Wow, we'll take a short break. Once we come back, more sectors and industries performance within the coronavirus pandemic.